Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session. In today's session, we are going to discuss a very important index of the Reserve Bank of India. And let me tell you that this index is important from the RBI grade B, RBI grade A as well as from the NABARD grade A perspective, because this financial inclusion index, from this a descriptive question has come in the NABARD grade A, and from this objective questions have come in the RBI grade B in the phase 1, in the phase 2 of the examination. Okay, so this is one of the most important index that the RBI releases, that is the financial inclusion index, whose value has increased. Okay, so we will discuss that what is the increase in the value and what are the parameters due to which the value has increased in the financial inclusion index. So this is very important index and it has come in the multiple news articles. So we are going to have the detailed discussion about the financial inclusion index. Okay, so let's get started. Give me a thumbs up if I'm clearly audible and visible. Good morning everyone, welcome to the session. Thank you for joining the session. So let's get started, but before that, do subscribe to the YouTube channel of EduTap if you want the relevant videos to continue. Okay, do subscribe the YouTube channel and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. So now let's get started with the topic, that is the financial inclusion index that has increased. Okay, so Reserve Bank's financial inclusion index, which captures the extent of the financial inclusion in the country, has increased by 4.3% during the year ending March 2025. So basically in July 2025, the RBI has released the financial inclusion index for March 2025. This is a yearly index that is released. Okay, so financial inclusion index, this is released on the yearly basis. Now, what is the meaning of financial inclusion? What is the meaning of financial inclusion? So as per the World Bank, the financial inclusion means including more people and including more businesses in the financial system of the country or the financial fabric of the country. Okay, so when more of the people or there are more individuals that are getting included in the financial fabric of the country, so that is financial inclusion. So financial inclusion means that individuals and businesses, they have access to and use affordable financial products and financial services. That means the people, when they have access to, when they have the access to the banking services, when they have access to the insurance services, when they have access to the pension services, and when they are able to use those services, use those products also, so that is financial inclusion. So financial inclusion means that individuals and businesses, they have access to, that they are able to access, they have the banking facilities nearby, they have the insurance facilities nearby, and they are not only having access to, but they are also using the affordable financial products and financial services that meet their needs, which are delivered in a responsible and sustainable way. Okay, so so financial inclusion actually means that the people, the individuals and the businesses, they are getting included in the financial system of the country, in the financial fabric of the country. I hope the meaning of financial inclusion is very much clear, because from this financial inclusion topic, a descriptive question can also come. So remember that as per World Bank, the financial inclusion means that individuals and businesses, they have access to, and they also use the affordable financial products and financial services that meet their needs, which are delivered in a responsible and sustainable way. Now the Reserve Bank of India releases the financial inclusion index, which captures the extent of financial inclusion in India. Okay, so now let's understand the financial inclusion index in detail. So first of all, the Reserve Bank of India had constructed a composite financial inclusion index. What is the meaning of composite financial inclusion index? When we talk about financial inclusion, do we only want to see that the people have the banking facilities or people have the access to the banking products and the banking services? No. When we talk about financial inclusion, we are also talking about the financial markets. We are also talking about the insurance products and services. We are also talking about the pension products and services. That people should have access to the financial system. That includes the financial market, the insurance products and the pension products also, not only the banking services. Okay, so financial inclusion is not limited to the banking facilities, to the banks, but the financial inclusion also talks about the financial market, the insurance, the pension sector and such. Okay, so financial inclusion, it is a composite financial inclusion index. This is a composite index that is incorporating the details of the banking facilities and banking products, the investments, that is the financial market system, the insurance, postal and pension sector. So the financial inclusion index, this is a composite financial inclusion index, or this is a composite index consisting of these services and products in consultation with the concerned stakeholders. Because if you want to know about the financial market, SEBI is the right regulator, right? If you are willing to know about the insurance sector, so IRDI is there. If you want to get the data for pension sector, PFRDA is there. So there are the different regulators that come together to have this composite financial inclusion index, or the RBI had constructed this composite financial inclusion index in consultation with the concerned stakeholders, including the government, to capture the extent of financial inclusion across the country, that is in India, how much financial inclusion is there, which was first public. Now this financial inclusion index, remember this, that it was first public in August 2021 for the financial year ending March 2021. I hope this is very much clear, okay? So the financial inclusion, we have discussed the meaning of financial inclusion, and we have discussed that in this index, there are the details regarding the banking, investment, insurance, postal and pension sector. So this financial inclusion index, this captures the whole financial system of the country and the people and the businesses that are getting involved with the whole financial system of the country, okay? Now the index for the year ending March 2025 is released. That means the index for the, in July 2025, the index for the year ending March 2025 has been compiled and has been released. Now the value of financial inclusion index for March 2025 stands at 67.0 against the 64.2 in March 2024. So basically you can see that the financial inclusion index value has increased from 64.2 to 67. So there is an increase that has been seen in the value of financial inclusion index. Now how do we understand that what is this value? 67, is it good or not? Okay, so try to understand that the index, first of all, it does not have any base year. So usually the index have a base year, and against the value of the base year we compare the other years. But in the case of financial inclusion index, there is no base year. So that means we do not have any base year to compare the other years with. So how do we know that this value of 67, is it good for the country or not? So the index captures information on various aspects of financial inclusion in a single value, that is 67 currently, ranging between 0 and 100. So the 67 value, you can see that the financial inclusion index value, it ranges from 0 to 100. If it is closer to 0, that means 0 represents complete financial exclusion. And if the value of financial inclusion index is near to 0, let's say it is 10 or 20 or 30 even, so we will say that, okay, there is not much financial inclusion in the country. But if the value is near 100, that means the financial inclusion is increasing in the country, and 100 indicates full financial inclusion, okay? So remember that the financial inclusion index ranges from 0 to 100. If the financial inclusion index value is near to 0, that means there is financial exclusion. The financial inclusion is not a lot, okay? But if the value is near to 100, 67, you can see 67 is closer to 100 as compared to 0. So that means the financial inclusion is increasing in our country, and we have a good financial inclusion in our country. 100 indicates full financial inclusion. So this is the idea. Any confusion anyone has in this? Any confusion here, anyone? Next is that the financial inclusion index comprises of 3 broad parameters. So financial inclusion index depends upon 3 broad parameters, that is access, usage and quality. First of all, we should have the access to the banking facilities. The bank should be nearby, or the ATM should be nearby, or let's say we have the access to the financial markets, we have the access to the insurance products and such. So first of all, there should be access that should be provided to the people, to the individuals and businesses, okay? After providing the access, let's say I have the access to the bank is just in the neighbor of my household, but I'm not going to the bank to get the financial or to get the banking services or to get the banking products. So I'm not using the facilities even if I have access to the facilities. So see, access is important. When we talk about the financial inclusion, the people should have the access to the facilities, then only they will use it. But once they have access to the facilities, are they using the facilities? So the second parameter is usage. So when more and more people start using the facilities, that is when the people are actually getting entangled in the financial system of the country, right? So usage is the idea. Then quality, how good the services are, how sufficient the services are, okay? The services, do they have good quality? Are they efficient? As well as how much the people are getting aware about the services, the awareness, how fast it is spreading, the financial literacy, the consumer protection, is it there? So quality means the consumer protection is there or not, the financial literacy is there or not, the services that are being provided, are they efficient and are they good or not. Okay, so these are the three parameters according to which the financial inclusion index is created, and the highest weightage in this index is given to usage, that is 45%, then to access, that is 35%, and then to quality, that is 20%. Okay, and the unique feature of this financial inclusion index is that it has a quality parameter which captures the quality aspect of the financial inclusion as reflected by the financial literacy, the consumer protection, and inequalities and deficiencies in services. If deficiencies are decreasing in services, if inequalities are decreasing in services, that means the quality of the services are increasing. Okay, so I hope this is very much clear that financial inclusion index does not have any base year against which we can compare the value, but it has the idea that 0 represents complete financial exclusion, 100 represents complete financial inclusion. So if the value is near to 0, that means the financial inclusion is not great in our country, but if the value is near to 100, that means financial inclusion is getting better in our country. Financial inclusion index value has increased from nearly 64 to 67, that means it is closer to 100, that means financial inclusion has increased in our country. Now the financial inclusion index depend upon these parameters: access, do you have access to the services; usage, are you using the services or not; quality, how, like, what is the quality of the services that you are using. Okay, are they efficient, are they like, do they have any deficiencies or not. So these are the three parameters according to which financial inclusion index is made. Now we have discussed about the financial inclusion index in brief. A question can directly come from the value of the financial inclusion index, and remember that there is growth that has been seen in all the sub indices of the financial inclusion index. That means there is growth in access of the services and the financial products, there is growth in the usage, there is growth in the quality. So the quality, usage and access, all these three parameters or all these three sub indices have grown. But remember that the improvement in the financial inclusion index from 64.2 to 67, this improvement that has been seen in financial inclusion index in financial year 2025 is contributed by usage and quality parameters or usage and quality dimensions. So from this, a question has come last year in the RBI grade B examination that the financial inclusion index has improved due to which parameters or due to which sub indices. So last year also a question has come, so this year also a question can come regarding the value of the financial inclusion index and the improvement that has come in the financial inclusion index. It is because of usage and quality parameters. Okay, this is the idea. Reflecting deepening of financial inclusion because more people have started to use the financial services and there is quality that has improved or quality that has contributed a lot to the financial inclusion index improvement. So that means there is sustained financial literacy initiatives that are being taken. Okay, so basically all the three indices have seen the growth, but the improvement in financial inclusion index is contributed by usage and quality because of the deepening of financial inclusion, deepening of the usage that is done by the people, and sustained financial literacy initiatives. Okay, this is the idea. Now some extra details. The index is responsive to ease of access, availability and usage, that is another parameter, and quality of services, comprising in all 97 indicators. So in these three sub indices there are 97 indicators. Okay, next is the financial inclusion index has been constructed without any base year, and as such it reflects the cumulative efforts of all the stakeholders by the SEBI, RBI, IRDI, PFRDA, government and such over the years towards the financial inclusion. Financial inclusion index is published annually in July every year. So this is the idea. Any confusion anyone has? So now this is the first question, very easy and direct question that you have to answer in the comment section below. I hope you will be easily able to answer this question. Okay. Okay, so everything clear? And let me tell you that there is a perspective 360-degree series that is going on Monday, Wednesday and Friday. If you want to have the answer writing practice, for your answer writing practice, you can see the perspective 360-degree series taken by Jaskaran sir on Monday, Wednesday, Friday at 5 p.m. where you get the current affairs topics and the questions that can come from your recent topics, from the hot topics, what descriptive questions can come. So that is discussed in the perspective 360-degree session, as well as the answers are also discussed in the perspective 360-degree session, as well as how to write the intro, body, conclusion for a particular question, and homework question is also given. If you write the answers in the comment section below, that answers also get evaluated if the answer is given within 48 hours. So basically, Perspective 360-degree series, it is a complete solution for your answer writing practice, and the hot topics or the recent topics, they are picked for your answer writing practice. Okay. Now this is the second question. This is also a homework question. Try to answer this question. Directly you have to tell that which of the following statement is or are incorrect. So try to answer. Okay. So this is it. Thank you everyone. Thank you for joining the session. See you in the next session. And thank you everyone. Thank you for joining. If you have any confusion, you can write in the comment section below, and do write the answers of the homework question in the comment section below. Okay. Thank you everyone. Thank you for joining.